Today, up the unemployment curve. Hello again, it's Martin North from Digital Finance Analytics, with our latest post covering finance and property news. Well, the ABS released the latest employment data, and they reported that in seasonally adjusted terms, unemployment rose by 0.1 percentage points, that's rounded of course, to 3.7% in April. So it's interesting to note that following 2 consecutive months of robust labour market outcomes, the labour force survey from the ABS exhibited a sudden shift in tone in April. Employment growth surprised to the downside in the month, falling by 4,300. And while the participation rates declined from 66.8 to 66.7%, saw the labour force expand by only 18,400. It was enough to raise the unemployment rate from 3.5 to 3.7%. But, by the way, at the 2 decimal point, the increase in the unemployment rate was more modest. It went from 3.54 to 3.66%. That's just representing a 0.12 percentage point lift. So you've got to ask the question, is it safe to interpret those results as an emerging downtrend in labour market conditions? Probably too soon to say, because the April 23 survey is unique in that the reference period captured the Easter period in full, a time in which labour market conditions can be affected. And the ABS said with employment dropping by around 4,000 people and the number of unemployed increasing by 18,000 people, the unemployment rate rose to 3.7%. The small fall in employment, following an average monthly increase of around 39,000 people during the first quarter of the year, explains the change. And similarly, the employment to population ratio fell 0.2 percentage points to 64.2%, and the participation rate decreased 0.1 percentage points to 66.7%. Even with these falls, both indicators are still well above pre-COVID-19 pandemic levels, they said, and close to their historic highs in 2022. Season adjusted monthly hours worked increased by 2.6% in April. This was because fewer people than usual worked reduced hours over the Easter period, the ABS said. The last time Easter and the survey period aligned like this was in 2015, when around 60% of employed people worked fewer hours than usual. This Easter, it was only around 55% of employed people. This may reflect more people taking their leave earlier or later than usual, or that some people were unable to, given the high number of vacancies that we're still seeing employers reporting. The ongoing strength in hours worked over the past 6 months shows the demand for labour to some extent is being met by people working more hours, the ABS said. The underemployment rate fell 0.1 percentage points to 6.1%, that's seasonally adjusted, following a 0.4 percentage point increase in March. The underemployment rate is still low in historic terms, around 2.6 percentage points lower than before the pandemic, and underpinned by faster growth in hours worked than employment, the ABS said. The underutilisation rate, which combines unemployment and underemployment rates, rose slightly to 9.8% and remains 4.2 percentage points lower than in March 2020. And turning to the underlying trend data, the latest monthly percentage increase in trend employment was slightly higher than the monthly average increase for the 20 years before the pandemic. The trend data continues to show how much stronger the growth in hours worked has been relative to employment, the ABS said. In trend terms, hours worked increased around 0.4%, which is around double its longer-term average of 0.2%, and around double the 0.2% growth rate in employment. The trend unemployment rate remained at 3.6% for the 3rd consecutive month, after earlier data was revised up slightly, and the trend unemployment rate remained at 6.1% for the 4th straight month. The trend participation rate remained steady at 66.7% for the past year, and the trend employment to population ratio fell less than 0.1 percentage points to 64.2%. In trend terms, the strong growth in hours worked, the high employment to population ratio and participation rate, along with the low unemployment and underemployment rates, all still point to a tight labour market, the ABS said. And it's also worth noting that youth unemployment increased to 8.2%, which is quite a significant increase. The unemployment rate did vary across the state, with New South Wales at 3.3%, Victoria at 3.8%, Queensland at 3.8%, South Australia at 4%, Western Australia at 3.6%, Tasmania at 3.8%, Northern Territory at 3.6%, and the ACT at 2.9%, and across Australia, of course, it's 3.6%. Now, it's also worth noting, of course, that the incoming and outgoing rotation groups did have an impact. The unemployment rate for those going out were at 3.2%, whereas the April incoming rotation group was at 4.3%. Comparing that with the April outgoing rotation group at 3.4% and the April estimate original at 3.8%. So what do we make of this? Well, it does seem to me that we are seeing the start of the expected higher unemployment rate. It's going to trend up over the next few months according to the budget papers. Let's see whether it gets there and above 4%. As always, of course, there's plenty of noise in the data, and the rotation groups do have a significant impact on the real numbers. So, to my mind, there is probably an indication of higher unemployment, which is bad news, of course, for those with mortgages, but the movement up is quite low, and therefore it's early days. We need to monitor this over the next few months to see whether this trend continues. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.